Okay, I think we should go ahead and get started. I'll give a quick introduction before handing it over to Andy. Um, Welcome, everyone. Judging from the record number of registrations that we had for today's webinar, our host needs no introduction. We've got Andrew Gauthier, the president of Mighty Startup. Mighty's a management consulting firm that provides financial guidance, strategic planning, and tactical support to early stage startups and small businesses. Andy has a wealth of experience that he's amassed from many years of launching and scaling up businesses globally. Before Andy started Mighty, he was the head of finance at BotKeeper, and before that, he launched a boutique tax and consulting firm. Andy's a certified public accountant and somehow still finds the time to serve as the treasurer of the Chesterbrook Community Foundation. Andy, welcome. We're super excited to have you today.
Thanks so much. Appreciate you having me and excited to be here. Thanks everyone for joining. Let me just pull up this slideshow here. We'll get things going.
Yeah, absolutely. While Andy's pulling up the slides, just wanted to make sure that everyone asks their questions as we're going. We'll be monitoring the chat, and I can ask the question live to Andy. We'll have time for questions at the end, but we'd like to make these as interactive as possible to make it as fun for everyone joining. So please feel free to drop your questions as you think of them in the moment, and we'll cover them. And then I'll officially stop talking and hand it over to Andy.
Awesome. Here we go. Sorry, technical difficulty here. Just one second. All right, let me know if you can see my screen.
Yes, I can certainly see it.
Cool. Yeah, so thanks again, everyone. Thanks for the intro. Happy to be here with you and the LiveFlow team. And today we're going to talk about mastering business growth with dynamic financial forecasting. So excited to dig in. Quick overview on what we'll cover. Already learned a little bit about me, so we can skip through that pretty quickly. Just want to cover who the target audience for this presentation is and who hopefully will find value. What we'll cover, we'll do a few deep dives into these topics and hopefully recap and answer any questions. As previously mentioned, please don't feel like you have to save questions till the end. We want to make this as interactive as possible and appreciate your participation throughout the webinar. So yeah, with that, we'll dive in. Again, quick background on myself. I guess more notably, I've overseen growth in finance and operations functions for various startups throughout my career, driving enterprise value growth pretty significantly through both capital raise, both equity and debt, as well as ultimate exits. And so I'm excited to share with you. Folks on this call, it sounds like there's a variety of folks, possibly some founders, several accountants, corporate finance professionals, or students interested in the field, possibly some investors on the call as well, and just curious folks. So if you fit any of these categories, hopefully you'll get some value out of this. We will cover a few key items here. The first being FP&A Software Landscape. It's pretty convoluted and there's a lot of players in the space, so I'm going to try to demystify that for you. We'll talk about just financial model maintenance in general, and some tips, tricks, and best practices there. And then we'll kind of wrap up and end with how do you define and find strategic insights from a good FP&A process in order to ultimately grow the business and find profitability. So with that, again, the FP&A software landscape is quite an interesting market. We ultimately decided to lean into Google Sheets with the support of LiveFlow to develop and maintain our financial modeling for our client base. And there's several reasons why. We'll dig into that now. So in general, the FP&A software market is very hot. It's grown quite significantly over the last decade. As a result of that, there's a lot of different new players to the space, seeing the market growth and potential. There's an overwhelming amount of options here. You can see in the graphic to the right, several different tools in the finance tech stack based on average company stage. And there's also a ton of new players that aren't even listed there, that have dropped in here: Modano, OnPlan, Basis, Drivetrain, Clockwork, Giraffe. All of these tools I've evaluated in some way, shape, or form over the last several years. And yeah, there's a lot, and it's exhausting. And I see a lot of founders, not sure which one to use. Maybe they sign up for one. I see finance teams often just kind of information overload and analysis paralysis. So trying to what's important is to avoid that at all costs. So
Andy, one question. Some of the folks on the call, maybe founders, maybe some of the students, might not be as familiar with FP&A. So maybe you could just explain what FP&A is, just for everyone.
Yeah, great point. So FP&A, for those of you that aren't familiar with the concept, financial planning and analysis, it's essentially the function of planning through some form of budgeting and forecasting, as well as the ongoing analysis of actual performance versus that plan or forecast. And so all of these tools essentially allow companies to better plan, whether it's through a traditional static budget or a more flexible rolling forecast that's updated on a more routine basis. Typically, it's best practice to have both an annual operating plan or your budget that's reported against, and that helps you just track progress versus the original plan. But it's also really important to assess company performance throughout the year and modify those assumptions you have for the business so that you don't run into any challenges with cash or managing your growth. So at the end of the day, there's all these different technologies you can use for financial modeling. What really matters is what is the customer's need. And the companies that we serve are early stage startups and small businesses. That typically means they have thin budgets, and a lot of the more robust legacy softwares in the space, like Anaplan, may be cost prohibitive. Also, what I've found over the years is investors tend to prefer Excel-based models over a web-based model that's kind of a black box and hard for them to tinker with assumptions and really flush out and validate the calculations. Also, notably, startups are very nimble, and they're often changing gears, pivoting the business model, et cetera. And so it's important to be able to adapt to those needs. And we found that Excel and Google Sheets are pretty great at doing that because of their flexibility. So because our customer base is pretty focused on very early stage, it makes sense to meet our clients where they live, which is generally the Google environment, and leaning into Google Sheets. We chose Google Sheets as opposed to traditional Excel for a few reasons, but one of the driving factors is we had a client that didn't have a Microsoft Excel license and had to purchase a Microsoft license just to use our model, and we wanted to avoid that from happening on an ongoing basis. So Google Sheets has served us well. In terms of model development and maintenance, there's a lot to be considered here. And we'll talk about kind of why we're streamlining financial model development and how we handle the maintenance on a regular basis. When developing a financial model, it's really important to think through what's the real purpose of the model. For example, oftentimes founders might want a fundraising model solely to support use of funds for their capital raise. What's more common and where we do a lot more work is with the financial operating models or rolling forecasts to help drive better business decisions on a regular basis throughout the course of the year. And so understanding what the purpose of the model is really important, and that will help drive how you want to build it. For the purposes of this, we'll be focusing more on operating models. Because we're focused on a pretty specific target customer, early stage B2B SaaS startups, we can standardize and templatize a good chunk of that financial model, including industry nuances, whether it's revenue recognition, deferred revenue, and other nuances, as well as the relevant KPIs for them. Cash position burn, ARR, net revenue retention. If we served every business under the sun, it would be a lot harder for us to standardize and use the same model across all of our customer bases. And then in general, best practices when developing a model, make sure the assumptions are clear. Oftentimes people will build a model and it's unclear how the data really flows through the model and where the assumptions are entered. Best practice I've seen is to use color coding or shading of certain cells to indicate what's an input field, what's a calculated field, and so on and so forth. And it's also really important to add some level of review checks to reduce the errors that are possible anytime you're using a spreadsheet. So simple balance sheet checks to make sure that balance sheet balances and other similar checks throughout the model are helpful. Once you have the template defined, it's really easy to rinse and repeat if you're using a similar model if you need the same type of model for a similar business rather. And one of the things that we like to do is the majority of our customers use QuickBooks Online, and we're able to lean into technology that sits on top of Google Sheets to streamline pulling QuickBooks actual data into the model to feed our ongoing reporting and analysis.
One question from the audience from Tiffany, Andy, is she asks, are there any limitations on Google Sheets compared to Excel for financial modeling, such as complex formulas that don't work in Google Sheets?
Yeah, there certainly are. And I know several finance professionals that strongly favor Excel to Google Sheets. At the end of the day, the modeling that we're doing isn't that sophisticated where we have not run into those issues. However, I have seen some finance professionals that greatly benefit from Excel instead of Google Sheets, given their experience and different macros and things they've built out over time that might not translate as well into Google Sheets. So definitely pros and cons, and depending on the nuances of your needs, Excel may suit you better.
I think we have another question from Ali for you, Andy, on Google Sheets again. So do you have any tips on preventing Google Sheets from slowing down when you have a massive document, other than removing empty cells?
I don't. I think what we tend to do is reduce the need for unnecessary data in the model. And by that, I mean, if there's, millions of rows of data that you have that you're trying to incorporate, there's likely a way to summarize that and then use that summarized data as the input in your operating model. And that can speed things up considerably. But other than that, don't have any major recommendations there, unfortunately. Sometimes it is a little slow. Get a strong internet connection.
Thanks for all the questions, guys. Keep them coming.
Yeah, please do. So when it comes to model maintenance, again, once you've stood up the model, there's this saying in FP&A where, essentially, I forget the exact wording of it, but it's something along the lines of um, financial models are good in theory, and whoever develops it has great intentions, but ultimately it's where good ideas go to die. And part of that is because they're not developed with thought for who will use the model. In some cases, it might be a fractional CFO builds a model. He or she is the only one that knows how to use it. And then if that person transitions out of the company, no one can maintain the model in the future. That can be simply solved with a well-structured model that clearly outlines inputs and where data is coming from. And the process for rolling the model forward, if it's not super easy. And so I think model maintenance is the most important piece to it. It's common for businesses to set up a budget, but then they don't look back at it until 12 months later when they're planning next year's budget. And it's a lot can change in a year's time and throughout the year, especially with the early stage startups that we support. And so making sure that we're consistently reviewing performance and updating the projections with new data and new assumptions around growth, headcount, and all of that is critical for the rolling forecast to be remotely accurate and depict where the business is truly heading. With that said, again, we lean into technology, LiveFlow specifically, which sits on top of G Sheets and QuickBooks and pulls in actual performance. So with just a couple of clicks, we can connect the data source and pull in actual P&L, balance sheet, and any other reports required to update the model. The other nice benefit of working in Google, and this is probably feasible in many other softwares as well, but we're really able to streamline the board reporting process for companies. We can set up a standardized slide deck with various graphics that come from the financial model operating plan. And once the data is refreshed, simply push the refresh button in the slide deck and add any additional color or commentary and present to the board without running around in circles and trying to update a traditional PowerPoint deck that might not be connected, or reinvent the wheel every board meeting. Ultimately, what this means is we can spend more time discussing the business performance and discussing changes to the business in terms of assumptions around growth, hiring, fundraising, etc., and less time putting reports together for the founders to receive and not get additional context on. Some of the most important ways that this has helped us and our companies that we support is just staying ahead of potential cash crunches in the future, and also identifying opportunities where if things are really humming, maybe it makes sense to raise a round of capital a little bit early to put the pedal down on sales and marketing efforts. So LiveFlow, again, is the tool that we have chosen after evaluating the FP&A landscape to streamline a lot of what we're doing for our clients. The lower hanging fruit was to use their product for kind of basic financial reporting. And where we're using it now is to really feed our forecasting and projections. We're moving along pretty quickly here, so that the third piece of today's presentation is really talking about strategic insights and how does dynamic financial forecast help you drive growth and find profitability. And spoke about this a little bit previously, but budgeting is often not sufficient for companies, and they need more than a static budget that's looked at once a year. Make sure to set smart goals when you're planning your budget, and essentially know that there's other tools that are available to you and can better serve the business than a traditional budget. The rolling forecast, again, allows us to pull in actual performance a specific scenario on this. There's a company we were working with, and we identified, that their top line ARR was growing pretty significantly, and at a good we identified it was growing significantly through actual performance. We identified that the future performance was likely to continue to be strong given the sales pipeline and other indicators. And so we were able to take that and facilitate funding for that company on favorable terms before the market went sideways. And those are things where if you're in the weeds as an accountant, not really thinking more strategically with the company's management, you might miss an opportunity to really help grow the business in a more meaningful way. In terms of finding profitability, years ago, it was everyone talked about growth at all costs, and you'd see the Ubers of the world growing and not really figuring out a profitable business yet. But those days are kind of over, and it's important to make sure at a minimum you have a healthy gross margin, meaning that the business can be profitable should you choose to not spend as much on growth or development or whatnot. And at some point, the business will need to throw off profits in order to yield any return to shareholders. And so it's kind of a balancing act with the companies we support. In the really earliest stages, it's still growth is still heavily favored, but as companies mature, finding a path to profitability is more critical. And if financing is going to be difficult given market conditions or business performance, it's sometimes necessary to pivot and find break even before you can really raise significant capital to grow the business the way you want to. So a couple of examples here. We identified a client where they were missing sales targets consistently. Through active FP&A process, we were able to identify areas to trim costs and reduce the burn, ultimately finding profitability and allowing them more time to achieve certain milestones so that they could successfully raise additional rounds of funding in the future. Those are insights that if that company were working with a traditional firm, maybe a more traditional bookkeeper, just likely would have missed some of those signals and not made the adjustments needed as quickly. So in summary here, the financial model landscape is super complex. We also wanted to cover model maintenance tips and tricks and identify some strategic insights through the FP&A process. I'd encourage all of you, as you're thinking through how to run a good FP&A process, especially if your budget's thin and you're a fan of Google Sheets, really consider leaning into Google Sheets to do your financial modeling and see how LiveFlow can help you facilitate that. I do have a quick slide that I can jump to. Not sure. Can you still see? Are you still seeing slides, or are you seeing a Google Sheet right now?
I'm seeing a Google Sheet.
Okay, great. So here's a very kind of simplistic model we threw together just for demonstration purposes here. But here we have a typical model. There's a dashboard with some reports, summary financial metrics in more tabular form. Financials that include both actuals as well as the plan. So here, quite simply, we can roll the model forward, and if we have another month of actuals, you can see how this data just refreshed. Simple kind of traditional process here. What's nice about using Google Sheets with LiveFlow is we can jump into extensions for LiveFlow, and we can manage which actuals are coming in. And so we can pretty easily, here's a copy of that. Pretty easily, we can connect a new company file to pull in actual cash flow, balance sheet, and P&L, which ultimately drives that financial model. It's literally a couple of clicks. So we have our template model. I can create a copy of it. Takes a couple seconds. And then jump into the extension and simply just connect the QBO account that's relevant. And in doing so, you indicate which time period you want to pull in, and there's a few nuances to setting it up, but it is significantly more efficient and effective than logging into QuickBooks, pulling all of these into Excel, exporting or copying that Excel sheet into another tab in the file, and then trying to map it up and hitch it all up. So can't recommend it enough. That's really all I got. So sorry, I kind of just ran through that very, very quickly. If there's any questions, happy to chat now and open up more conversation, or follow up if there's any way I can help.
Yeah, I'd echo that. That was great. Thank you, Andy. We'd love to get some questions. There've already been some good ones from Ali and Tiffany. If anyone else has any, feel free to type them into the chat and we can answer them live.
Any questions at all? No question is bad.
Oh, we got one from Ali. So Ali is asking, can you show us how you build your formula so that when you adapt to a new company and add new COAs, and new COAs are added, you get the formulas to continue to work?
Yeah, so in this demo file, it's not a very sophisticated formula. But the way that we think about that is we typically do a chart of accounts overhaul with the company and get more deep on the accounting side of things. In doing so, we like to structure things where each functional area is a parent account within the GL. And that seems to work best for QuickBooks reporting. I know if you're using a more sophisticated GL like NetSuite or something like that, they might have other dimensions to use. But for QuickBooks specifically, we essentially create functional GL accounts for G&A, sales and marketing, research and development. Oftentimes we'll carve out sales and marketing as different functions, but the premise is the same. And then when you look at the actuals, you can see there's these total buckets for those categories. And so it's easy to have the formula reference that if you use the same chart of account structure across the customer base. Does that make sense? Essentially, yes. And if the company is not comfortable, shifting their, ultimately what can happen too is some massaging is needed occasionally if the company doesn't want to change their chart of account structure, or maybe G&A is 6,300 instead of 6,000. But those are relatively quick tweaks, and structurally the model copies over nicely. If that makes sense.
Great question.
Yeah, really good question.
Other folks have any other questions?
Any questions at all?
Oh, we might have just gotten two in the Q&A. Give me 1 second. We have a question from Krista.
Yep.
How easily does this translate to visual charts?
Yeah, so pretty easily. I didn't spend enough time putting this together, but you can see once the charts are set up, it's just a matter of like formatting and polishing them. And this will pull from either the summary data or in this specific model, we have it pulling from summary data, but you could pull it from summary or financials. So we have a simple data table here. A lot of this is not fully hitched up, but that's the gist of it. Once you have the data table, it's super easy to put the graphics together, and then rolling it forward is easy as well, because essentially what you do is simply update the start date of the model, and everything else will flow. Hopefully that answers the question, Krista. And then the actual graphics, these can just be, certainly polished up a little bit more, add titles and whatnot, but these can just be copy pasted into a slide deck. And then you can copy the slide deck as a static copy for the last board meeting or management presentation, and use the existing one as the kind of live deck that you continue to refresh. Mash, good question here. Feature that can help with assumption drivers, for example, $5 million raise, platform forecast. So this would all be kind of baked into the hiring plan, and the way that, sorry, I'm just looking for the question again. The way that we would look at that, Mash, is actually taking a more detailed approach in terms of how we build out the assumptions for hiring. We typically, because we work with early stage companies, we typically model out essentially named hires or roles, each named hire or role in a specific line. But as headcount grows, that's not super sustainable. And so you can then translate to, let's add a line for each function. Maybe you're adding one line for SDRs, one line for account executives, one line for customer success. And you can drive those based off of whatever assumptions you want. So for example, here's just a list of some basic assumptions that might drive the model. And this will be nuanced to the specific company, but maybe you care about how long the sales cycle is, what the average contract value is, their setup fees, how many customers a rep can support, quotas for AEs, and an AE to BDR ratio. And then all of these inputs, if they're in one spot, make it easy for you to articulate it to any readers of the financial model, whether it's founders or management or investors. And then these would ultimately drive the model as it's built. So Google Sheets itself doesn't have an out-of-the-box model that's going to allow you to do that. But with a little bit of work, Google Sheets and Excel are definitely flexible enough to do what you're looking to do. It's just not, but that makes sense. Looks like you guys might actually have a template, so that's great.
Yeah, I just dropped it in the chat for anyone who wants to access that as well.
Cool.
Great questions, guys. We still have more time, so if there's still anything on anyone's mind, please ask.
I'm going to pop open that model that you shared.
Yeah, you could also, if you don't want to type in your email, you could go through the extension and click start from template.
Yeah. Yeah, that's the other thing that's really nice about LiveFlow. There are a lot of other folks here that
You could try it from create report and the drop down, Andy. If you exit out of the extension and then
what is it? Create report. Got it.
Yeah, perfect. There you go.
Cool. Yeah, so there's a lot of other folks that LiveFlow has partnered with that help with
We can go.
some of these templates, and
I guess we can go ahead and select whatever company and then
I guess it doesn't really matter. Let's see. I'm not sure if it's going to pull up. I can't remember exactly if it pulls in any data. I don't want to necessarily share.
Yeah, that's fair.
Hold off on that, but there's all sorts of templates on the LiveFlow website. We're hoping to add a few there in the coming weeks and months. So definitely check out their library. Lots of great stuff there. And also, I guess worth noting, this is specifically a 13-week cash flow forecast. Those are particularly useful for small businesses where there might be more significant cash crunches or frequent cash crunches. And that's one good tool. What we find is often helpful is like a 6 to 18 month outlook, usually 12 to 18 month outlook. So companies that have secured funding can better manage their burn and stay ahead of any surprises.
I think we have a question from where did it go? From Lindsay. Do you have classes for those that do not have a finance background and yet are in C-suite roles? And I'm going to ask you if you could click under product really quick.
Got it.
And if you click how-to guides, we have a whole section of guides, Lindsay, that might be useful for you. Anywhere from Google Sheets tips, Excel tips, to LiveFlow specific tips. And then we also have, I'll put this in the chat, but it's called help.liveflow.io, where there's a whole host of articles that'll be able to help as well. And other than that, you can always reach out to us at LiveFlow as well.
Yeah, and we don't provide any classes per se, but happy to have a conversation and help however we can. Similarly, we have some resource guides, but it's more glossary and definitions of terms than it is how to do A, B, or C. So. Any other questions here?
It looks like we have one more actually. Do you have a tool, Andy? Do you have anything maybe that is to use to write data to QBO? Do you have any suggestions for that?
From G Sheet specifically, no. So there are tons of different technologies that integrate with QuickBooks in terms of managing your actual accounting. There's spend management tools like Brex, Airbase, Expensify, and millions of others that can write data in. Gusto has integrations, right, to automate some of the payroll journal entries. So definitely lean into those systems in your tech stack, and there's likely an integration to QuickBooks for most of them. But as far as pushing data from G Sheets, no, I'm not aware of one off the top. I believe you can see end of month close, got it, journal entries. I do think you can, the way that we do it, at least, is we just leverage the recurring journal entries. So the structure is at least there, but it is a pretty manual process. Some end of month close entries, if you're thinking about like amortization of prepaids and other things, can be done through those spend management tools. Like we use Airbase, and they help us with amortization entries directly. So it's one less thing we have to do. Kind of think of other month-end close entries, like RevRec, for the most part, we're either doing it manually or leaning into subscription management tools like Ordway and otherwise. But just having the recurring journal entries feature in QuickBooks, if you're not already taking advantage of that, I highly recommend it. Good question.
Thanks, Ali.
I know we wrapped up early. I'm happy to stay on for another few minutes if there's other questions that do come up.
Any last questions from the audience? If anyone does think of anything after the webinar, feel free to shoot us a note. I'll drop my email in the chat. You can always email me any questions, and I can get in touch with Andy and get back to you. Or if it's a LiveFlow specific question, I can just get back to you directly. I'll drop that in here just so everyone has it.
One quick final question I would ask to everyone is there anything in particular you're hoping to glean from this that you didn't? I think that's hopefully you've already asked those questions if there's a takeaway you're really hoping to get, but if not, happy to try to help before we wrap up. Cool.
So that might be everything.
Yep.
Well, Andy, thank you so much for joining us today. That was very insightful, and confident everyone gained a lot from that.
Appreciate it. Yeah, thanks for having me, and hope everyone has a great rest of their day and a good weekend.
Sounds good. Everyone have a good Friday and a good weekend, and we will send out the recording and post it on our YouTube channel as well. Thanks for registering, everyone. Bye-bye.
See ya.